Well, it's a pleasure to be with you again. I was with you last December as well, and I'm pleased to share with you my own perspectives on how the economy has changed since then. So without any further ado, why don't I go ahead and put on my screen, and I can start sharing with you what I see coming ahead. And like Marvin said, it's not exactly as bright as we would like it to be, put it mildly. And I call it fallout, headwinds, and new leaders. So what's our economic outlook like? I have a seemingly long outline, but I will breeze through this because I only have 15 to 20 minutes to do all of this. So I will leave this PowerPoint with you so you can have a better look at it in case you would like a bit more of the detail. The first thing I'd like to talk about is the changed economy. Of course, I'm going to start with my trademark pitik test, presyo, trabajo, kita, and my usual color coding, if you may be familiar by now with this. Being an Ateneo professor, good news comes in blue, and bad news comes in, you know what. So presyo is bad news because this has been an accelerating trend right now. And the last inflation rate we got reported last month was 5.4%, and we're averaging about 4.1 for the year so far. Trabajo is blue-green because it's both good and bad news. The good news about it is that we have already brought it down from more than 10% in 2020. And it's now, as of the last report, was just 5.8 actually in March, although averaging 6.2. That's still higher than where we were before the pandemic. Kita, or GDP, which is really incomes or production or output, has been better. That's the blue part, because there was even a surprise to us when we had a 8.3% in the first quarter. Now, this is a graph of the inflation, the roller coaster ride we've been on since the last few years. And the thing to note, of course, is we're now on another upsurge, and it's not quite clear when that upward trajectory will stop. On the jobs, we can see how unemployment rate has been playing between 6 to 7%. Like I said, it's now 5.8, but that could change again because it's been very unstable. And of course, if you look at jobs generated in January, we even lost 3 million jobs compared to the previous month. But again, we're regaining all of that lately. On the output or kita, I think what I'd like to stress here is that during the pandemic, agriculture seemed to be the most resilient. It had the least decline. But now that we're back on more or less normal mode, we can see that we actually have agriculture declining. However, I'd like to qualify that by saying that if you don't count fishery, livestock, and forestry, in fact, livestock especially, because this is where there's been a big contraction due to the African swine fever, agriculture actually grew 2.4% in 2021, if you don't count those anomalous factors pulling it down right now. By the way, the thing I encircled there about manufacturing industry is very significant because industry is now growing faster than services, which has not been the case. Usually it's services that have been the driver of our growth. But here's where the change in the economy has happened, in the nature of jobs. Jobs were lost massively in transport and storage, in hotels and restaurants, and in industry, in manufacturing and construction. But where did those workers go? Well, they ended up going to agriculture, they ended up going to trade, and that's retail trade. Usually this is a buying and selling, or the informal selling, in fact. And so that happened for the jobs in agriculture, for the jobs in transport and storage and hotels and restaurants, also happened for the jobs in manufacturing and construction. So indeed, we've seen a change in the structure of the economy itself. In terms of output, well, again, as I indicated earlier, the agricultural output fell only slightly, while industry and services saw very deep declines. But if you took away livestock from the agriculture equation, actually it grew. It had a significant expansion. But on the lower graph, you can see how there's much more people working part-time and much less working full-time in terms of 40 hours a week or less for the part-time. What this tells us is there's a lot more informal sector work done. And in an economy where there's a lot more informal sector activities, it means there will be lower tax revenues for every peso of GDP. And so in general, it's going to be harder for our government to raise revenues, given that the tax base is shrinking due to more informality. So in general, the changed economy can be summarized as follows. The agriculture and fishery and forestry sector has increased its share in the GDP from 9.2 to 9.6, and it was in fact even a higher but abnormal 10.2% at the height of the pandemic. As I said, because it was the most resilient of the sectors. Lower productivity is actually evident in the trade sector, wholesale and retail trade. And the evidence is that there are 1.15 rather million additional workers, and yet the output of that sector went down. The incomes went down by 68.3 billion. Manufacturing is growing faster again. That's good news. It's faster than the overall economy at 10% versus just 8.3 for the rest of the economy. And so the GDP share of manufacturing is up. And that's good news because the quality jobs are in manufacturing. In services, the growth is coming from health, education, and information and communication technology, understandably. But again, this is the twin fallout coming from the two major events that have affected economies around the world: COVID and, of course, Russia and Ukraine. I've already talked last time about the human cost of the COVID crisis, meaning poverty and hunger went up, education took a severe blow, and both of these are long-term threats for the country, especially when I talked about stunting and severe malnutrition affecting the productivity of our people 20, 30 years from now, because it's a long-term effect on the children who are stunted right now. So the economic impact has been because of the massive amounts that have been spent by governments to deal with COVID, both in terms of assistance and in terms of the COVID control and the vaccines and all that. So the fiscal fallout has been tremendous. Governments are heavily in debt, and inflation has been rising because of this kind of fiscal imbalances happening in many, many countries of the world. Now, in terms of the Russia-Ukraine conflict, if we look directly at how we relate to Russia and Ukraine, there's very minimal direct economic linkage. Whether we talk about exports to both, less than 1% of the total coming from these are bought by these countries, and imports even less, less than 1% also. Foreign direct investments, just a trickle actually coming from Russia, $110,000. From Ukraine, even less at only 10,000. This is data from 2019. And overseas remittances from our workers, again, hardly anything because there's very few of our people actually working there. Only 2.3 million from Russia, only $121,000 from about 350 Filipinos, according to the DFA in Ukraine. The heavier impact is on the indirect effects on us because of the global impact of the Russia-Ukraine conflict. It has affected the crude oil prices and, of course, the availability of it itself, natural gas, fertilizer, wheat, sunflower oil. So all of these markets for commodities have been affected by the war. And so this is what is impacting on us, the difficulty of accessing fertilizer, and of course, the high price of it right now, and the impending food crisis that everybody is now anticipating, including the Food and Agriculture Organization of the United Nations. The World Bank expects high global prices to persist until at least 2024. And so how do we move forward? Well, I would have 5 quick prescriptions here. First, put people first. We have to most urgently address our health and nutrition and education crisis. And some ways forward include upgrading the public health system, strengthening our food systems and food security strategy, and mobilizing a new education commission, a multi-sectoral group that will really plan the way forward for solving our education crisis right now. Number 2, maximize our lands. And by the way, there's a deliberate design in my ways forward. Number 1 is people. Number 2 is lands. These are our 2 most precious and most challenged assets right now. How do we maximize our lands? Well, the speech of the president, the newly inaugurated president, essentially focused on agriculture. I consider it our economy's backbone. First, agriculture, in fact, was very resilient during the pandemic. In fact, I was saying that if not for livestock, which is an abnormal anomaly because of the African swine fever, it actually had grown positively by 2.4%. Agriculture is also now the biggest single provider of jobs in the economy. It has dislodged trade, wholesale and retail trade, as a result of people going to agriculture during the pandemic recession. In contrast, manufacturing, transport and storage, and the hotels and restaurants now account for less of the jobs than they did in January 2020. And agriculture is also the most geographically inclusive sector. If you look at services, just 2 regions alone, which is Metro Manila, Calabarzon, account for more than half of total GDP coming from services already. In industry, it's just an additional region, and that is Central Luzon. So only 3 regions, more than 50%. But look at agriculture, fishery, and forestry. It's more evenly distributed across the country. So when that sector is the one that grows, there's a much wider benefit geographically across the country. So how do we get the most out of our lands? Well, I've often said we simply need to copy our neighbors, whether in looking beyond the farm gate so that we look at the entire value chain, on clustering and consolidating farm management because we have such small farms as an average, and of course, putting more financing in the hands of our small farmers. Let the provinces lead in terms of the devolution because we have too much of a top-down management of our agriculture when it had been devolved by law since 1991, but we didn't quite organize it too well. And of course, we have to copy our neighbors on the matter of budgets being given to agriculture. We are only giving less than 2% of our total budget to agriculture, but Vietnam is giving 6.5%. Of the rest, who are doing, of course, much better than we are also giving much more than we are. So again, there's a lot of things that we can simply copy from our neighbors. Now, the third way forward is the services sector. This is the biggest provider of jobs in our economy still so far. And if we look at the new normal, well, really, there's a lot of things that we can see developing, including fintech. We've seen how there's been a surge in the ability of Filipinos to use electronic payment systems, whether it's GCash, InstaPay, or PesoNet. If you look at foreign tourism, that's going to take some time to recover because the 2020 levels were well below what they were in 2011. So the recovery will be a long, hard road simply because people's confidence to travel overseas, especially, is still very much limited. But if you look at real estate this time, you can look at the developments moving outside of Metro Manila. And also there's more towards less towards condos and more towards so-called horizontal properties, meaning house and lot or townhouses. And this is the result of surveys that are being done by the big property development firms. And so they see that this is where their constituents are going. So in reshaping our services, I just point to the need to widen and deepen financial technology so that it will be more inclusive again. And this is one of the things that COL Financial is doing, in fact, for attracting more small savers to benefit from the opportunities. Ramp up domestic tourism rather than rely on foreign tourism. And that means a little bit of reconfiguration in our tourism sector. Widen the reach of logistics services, reorient the property development the way I described. And of course, important here is to retool and direct the workforce toward the things that are needed now: technology, logistics, creative skills types of jobs, and foster more entrepreneurship so that people, especially young people, can aspire to be creating jobs rather than aspire to be looking for a job when they graduate. The fourth way forward, look outward. We've been too inward looking as an economy for far too long. But there's a lot more potential for growth if we look to the export markets. Look how pathetically behind we are in terms of exports. Well, in the last 5 years, we've only averaged $69 billion a year in export earnings. The next highest is more than twice that, that's Indonesia. And the rest, of course, you can see how much higher. And Vietnam is now second to Singapore. It had really come from behind in the last 15 years. Now, this is even seen more in agricultural exports. Look at how we're only doing $6.7 billion a year, and yet Malaysia, Thailand, or Vietnam are doing 25 to 41 billion a year. There's something terribly wrong about how we're managing agriculture, that we are neglecting the potentials for agricultural exports. And all of this is related to our inability to attract foreign direct investments, again, of which we have the least of compared to our neighbors. Why? Because most of our neighbors' exports are really coming from foreign firms, the foreign investors, that they have been much more successful in attracting to their shores. So in looking outward, I really mean we have to break out of this vicious circle right now we're trapped in, of a limited internal market, which is constraining our economic growth because we're not exporting enough, And so that leads to low average income and high levels of poverty, which in turn causes that limited internal market. So it's a vicious circle. We have to chart an aggressive and new Philippine export development plan. I happen to be part of the team, by the way, commissioned by the Department of Trade and Industry to do this. And so we're trying to really be aggressive in this planning. Again, as I said, copy our neighbors' good practices, especially in agricultural exports. And we need to participate actively in RCEP, the Regional Comprehensive Economic Partnership, and other trade agreements that we can still pursue, because we can tap a lot of wider market opportunities to diversify our exports, both in products and in destinations of our exports. The last of my 5 ways forward is don't look back. We have to sustain economic reform directions that have been taken by the previous administrations very systematically. And so with the new economic management team coming in, the first order of the day again, fix the education and nutrition crisis, prioritize our strategic infrastructure, ease the investment impediments, keeping those FDIs out, and of course the regulatory burden that also discourages them. At the same time, we have to keep the fiscal house in order and curb corruption. Now, it's not enough to declare zero tolerance for corruption. We really have to enforce that zero tolerance for corruption. So what's my big outlook for 2022? Well, the pressure part, we expect our annual inflation to average at between 5.5 to 6.5. And you'll see later on, it's around about 6 or so. In terms of jobs, an unemployment rate of still within 6 to 7%, because the quality of the jobs remains the challenge. And in terms of GDP growth, we expect it to settle back at what we have been seeing in the past 10 years, 6 to 7%. The 8.3 we saw in the first quarter was more of a base effect, because the same quarter a year ago had a negative 3%. So we were really growing from a small base, which makes it easy to get a higher percentage. Rest of the year, in fact, on the second quarter, we will already be growing from a 12% year-on-year growth in the second quarter last year. So you can expect the second quarter growth to be much less, but the average we expect to be between 6 to 7. Now, let me borrow a couple of slides from Congressman Joey Salceda, who I watched give a lecture here in Los Baños recently. And this is the slide he shared, which I believe comes from the Bangko Central's projections itself. In other words, an 8.7% inflation rate by December, but an average for the year, therefore, of 6.1. But what we can see here is that the worst is yet to come, and the light at the end of the tunnel as far as inflation depends on how fast the resolution of the Russia-Ukraine conflict will happen. In terms of the outlook for jobs, we really have to reverse that informalization of our job market. Tourism sector needs to revive, but it hinges on our COVID-19 outlook. And now it's not exactly very encouraging to see rising numbers. The BPO sector, again, the work from home or incentives issue is getting in the way of clearer projections for that. We need more manufacturing jobs and therefore more foreign direct investments and exports. And note again, we have a large farm workforce now, but we need to have an upgrade in their productivity, or if not, shift them back to manufacturing or higher value services. In terms of the Ateneo macroeconometric model, we are projecting for the rest of the year about 6.3% average for the year. We were a little less than what the actual was in the first quarter, but again, we were the second closest among all the analysts. And as you can see, we're expecting 6, 5.9, 5.7, really more tempered growth rates for the remainder of the year. I will not go into the other sectors for lack of time, but you can see some of the standouts there in terms of double-digit growth expected. Now, again, a couple of slides from Joey Salceda. He showed this graph that shows, again, our debt to GDP ratio. And, it is generally available data, in fact, from the Department of Finance. We've already breached the so-called safe 60% debt to GDP ratio. We're about 63 right now. So what we need is really fiscal consolidation, and that means improved revenues and tighter spending. But the projections of government is that we will need an additional 300 billion pesos per year. And yet, the estimate of Joey Salceda, by the way, is that better tax collection efficiency, which is what incoming Secretary Jokno has said he would like to rely more on, can only yield an estimated 57 to 95 billion. So in short, we probably will need new taxes. So in terms of the fiscal challenge for the government, the payments for the COVID-19 loans that we got will be bunching up in the next 2 years. So we will need belt tightening, improved collection, and like I said, new taxes look to be inevitable. But the new taxes would best be done in the form of non-distortive wealth taxes, as well as what the economists call externality correcting taxes, the taxes that correct for pollution behavior of people, for example, or carbon emissions, so that the carbon tax, pollution taxes, even mining charges are part of this package of less distorting taxes that we should be looking at more. Now, in terms of the peso, I'd like to take the opportunity to talk about why I hate using the word weak or strong to describe the currency. The headline the other day or yesterday in one of the dailies was the peso was the worst performing currency. I would rather describe it as the most competitive currency. And that is if you're looking from January 1, 2022, only from the start of the year. Indeed, it's true that if you benchmark from January 1 this year, we have now the highest increase in exchange rate. By the way, that red one is the euro, just to show us how strong or weak the dollar is. But the ASEAN comparable currencies are these ones. And you can see that indeed, we had the highest increase in our exchange rate. But I don't describe that as the worst performing. I describe that neutrally as being the most depreciated, but it would even be described as the most competitive currency because it makes our exports most competitive compared to Malaysia, Indonesia, and Thailand that we have here. Now, note, however, that if you look from the start of the pandemic, January 2020, actually our peso has been the least depreciated among the other three. And so, again, if you use the language I prefer, it is the least competitive if we look from the start of the pandemic. Now, this is the reason why incoming BSP Governor Philip Medalla is saying, well, he's not too worried about the exchange rate. He's worried more about the inflation because that is really the mandate of the Bangko Sentral anyway. So just a quick glimpse at the other growth drivers in the economy, the digital economy and allied industries, as I said, being fostered by the new normal. So a lot of things being done digitally now, but it will also help accelerate agriculture because a lot of digitalization is happening in agriculture. In construction, we need sharper prioritization and more dependence on public-private partnerships because of the fiscal constraints of government. And housing is one important direction to go, which has a very high multiplier effect. In mining, there's really going to be a need to have much more domestic processing. Maybe we should follow Indonesia's lead of banning the export of raw ores. They are demanding that the minerals be processed domestically before they can be exported. But this will need a lot of additional electric power capacity. Now, the policy environment for mining really needs further clarification, and the role of mining, especially nickel, and the things that go into the batteries are very crucial for the future of electric vehicles, which is now one of the things that our government is looking at to be an important driver in the future. And finally, in power, our thin power reserves right now are threatening our medium-term economic growth. So we really need substantial new investments, especially in natural gas, so the cleaner fossil fuel, that is, and of course, renewable energy as against coal. So what we really need is a new forward-looking energy roadmap that will also enhance our energy security using more of our domestic renewable energy resources. I'll just close with something I said in a column I wrote last week, that given the state of our country and its people right now, what we really need to do is start with the basics. And that means our two assets that need the most attention, our people and our land. And as you recall, these were the two first things in my 5 steps forward. Thank you so much, and I'll be happy to answer questions later.
Oh my God, there are a lot of things that we have to do. Oh my God, may I invite you to some Q&A? I have a lot of things I want to discuss with you, but in the interest of time, let me go through it right away. So back to basics, take care of our people and our land. agriculture. But sir, tinamaan ako doon sa sinabi nyo eh. The worst is yet to come. Based on the numbers, looks like our economy is still going to grow for the next 6 months. Mga above 5%, 6%. Decent. And your 5 steps looking forward looks very promising. People, agri, fintech, export, economic reform. But that's gonna take years, di ba? Correct me if I'm wrong, sir. Am I right in understanding that next year doesn't seem to be looking good?
Well, I will not try to mislead you and the rest of the audience, and that rough times are really ahead. I mean, literally, a storm is coming, and like you said earlier, we're just heading into the eye of the storm. However, maybe to make ourselves feel a little bit more confident, it's useful to remind ourselves that during the last major crisis, and of course, the one I'm thinking of first is the Asian financial crisis towards the end of the Ramos term. I was still in government. Yeah. We weathered that quite well. In fact, we did not have much of a decline when our neighbors had double-digit recessions. No? Same thing happened in 2008, 2009. And why is that? Well, there's one blessing in disguise that we have with our economy. What I showed earlier about us having the least exports is also telling us that we have less vulnerability to the global shocks that are happening out there. So that happened in 1997, 98. That happened in 2008, 2009. That's why we were virtually unscathed by these global shocks that happened during that time. In other words, more of our growth is coming from internal demand by Filipinos themselves. So this is where the demand of Filipinos, fueled, by the way, by OFW remittances, and that at least has been steady and it's been continuing to grow. But fueled by by remittances and also, of course, government spending and domestic investment spending. Yun ang magdadala pa rin sa ekonomiya natin. And that's the kind of growth that can be more resilient in the face of global shocks and global pressures coming from Russia, Ukraine. And so that gives me some hope. And that's the reason why we can still project some growth within the year. In fact, we expect to grow faster than the rest of the world as the IMF is projecting. IMF is only saying 5.4% for the emerging economies of Asia. Tayo, we can do over 6, in fact. So I think we're still better off. But again, we better brace ourselves. We have to do what we can to make sure that the internal forces that drive our economy are actually brought, we capitalize on that as much as possible.
Yan nga, sinabi niyo, sir, internal forces. I saw your chart. The second thing that caught my eye is the 8% inflation that Congressman Salceda was projecting. Are we facing now, sir, a low growth or high inflation? Sabi nga nila, is a stagflation scenario for next year?
Well, the inflation in our case is coming primarily from, again, external forces. The fact that petroleum prices have been high, that has also led to high prices for fertilizer. And then, of course, yung persistence ng African swine fever. But what I'm stressing here is that supply side nanggagaling. It's cost-driven inflation. It's not the kind of inflation that America is experiencing right now, coming from too much money in circulation. I mean, the Fed literally printed a lot more money to fund the heavy expenses of the US government for their own ayuda, and of course, for their own expenses to manage the pandemic. Tayo naman, we were very prudent. BSP has always, in fact, been winning awards for managing the money supply very well. So, yun ang dahilan kung ba't yung inflation natin talagang dependent on outside forces. On the other hand, because we do have that internal strength in our economy, as I'm talking about, for example, the resilience of agriculture, then this is the kind of thing that will be our sandalan, kumbaga, when all of these storm winds come.
Speaking of sandalan, well, I guess most of our economic managers so far. You've spoken to them, and from what you have seen so far, or I don't know if you've spoken to them, talked about their plans, no? Sir, are we in good hands?
Oh yes, we are. Oh yes, we are. Well, of course, maybe you think I'm biased because I know these people very well. In fact, Philip Medalla, our new BSP governor, was my immediate successor to NEDA when I stepped down in 1998. So I like the fact that he is a very well-seasoned economic policymaker, not just in the monetary side, but in the overall economy side. And of course, he's been in the monetary board for the last 11 years. So he knows the Banco Central and how it should work, like the back of his hand, so to speak. Si Ben Diokno, in fact, is now back to where he is a better fit. Ben Diokno is a public finance specialist in his PhD economics training. So the Department of Finance precisely is where he would use his specialized training even better. And of course, I like the fact that R.C. Balisacan is back in NEDA. He was there under the Pinoy administration and he did a wonderful job. He is considered the foremost authority in this country on poverty, at least in the economics profession. He is recognized to have the best, most extensive research in poverty. So he will make sure that our economy will also be growing in the most inclusive way so that lahat umaangat, pati yung mahihirap.
But I don't know if you can answer this, sir. Pero tatanungin ko na rin. Kasi, the past administration, medyo hindi naman masyadong hindi masyadong, they say, hindi naman pinakaialaman si Secretary Dominguez. And from what you've seen so far, how is it going to be kaya? Yun ang risk, di ba? If we let these economic managers do it, mukhang okay. Pero how is it kaya? How is it going to be? Do you have some comment on that?
Well, at the risk of being divulging something I should not, I've actually heard from these economic managers who have just been appointed, because again, I've access to them. At least one of them has told me that they, in fact, in their group meeting, have been assured that they will really get free rein in the management of the economy. That hopefully there will not be a kitchen cabinet who will thwart whatever recommendations they have, which is, as you know, happened before. Hindi ko babanggitin kaninong presidente. Pero this is the kind of danger. Even if you have the best economic managers, kung matuthwart naman yung kanilang recommendations and their own directions, then again, it will come to naught. Apparently, the president has assured these economic managers that they will get free rein. He will trust in their capability to manage the economy. So given that, I have reason to be confident right now.
Okay, that's comforting to hear, sir. We're getting a lot of questions in the audience, and sir, okay lang ba? We'll just try to answer some of them before I let you go. Maraming tanong eh. Ladies, can we show some of them? Well, what can we ask?
May napumili. I'm looking at the Q&A box myself, but
may mga ano dyan eh, may mga questions dyan eh. But let's start with one from Giller. We import fuel and a lot of our food, but with the weaker peso, at what point will the exchange rate be a major problem for our inflation rate? What are the pros and cons of a weaker peso?
Well, I'm more worried, again, precisely of the higher price of fertilizer leading to lower productivity because of less fertilizer application. But what are we doing? Well, right now in UP Los Baños, there's actually a great deal of effort being put into what they discovered many years ago, what they call the bio-N fertilizer. This is actually a microbiological process that induces nitrogen fixation in the soil. In short, it's a natural substitute for chemical fertilizer. So these are the kinds of things we need to do. But the question is, okay, at what point will the exchange rate be a major problem? Well, clearly, the exchange rate matters because of the imported fertilizer that we have. So this is where it already is hitting even now, because 3 times na ang presyo ng fertilizer from before. But the challenge is really now to produce as much as we can in the most productive way here domestically. And so this is the time to really look at the kind of things that the new president talked about in his inaugural today. Sufficiency, we have to really look at hiking production. We really have to look at how we can really help our farming sector and our fishery sector hike production as much as possible. Because indeed, the rising exchange rate, but more so the rising prices of agricultural inputs are going to be affecting food availability and accessibility. So again, the question is, what are the pros and cons of the weaker peso? Maybe to save time, I'll refer you to my article. What's the day? I think it's the other day, last Tuesday.
The Inquirer.
wherein I talked about what is the BSP doing. There I'm talking about who gains and who loses from a weaker or stronger peso. And again, please avoid using the term weaker. Just say depreciated or appreciated peso. Because hindi tama yung sasabihin mong weaker yung peso. It's a more competitive peso.
Competitive, okay. Yeah. So, yeah. So we'll look at that sa article nyo. But I was happy to note naman, sir, na yung pinasent nyo kanina that if you compare it to 2021 till today, mukhang our exchange rate is more competitive, meaning we're just inside the pack.
Yeah.
So next question from John. What should the government do to bring down prices, support growth, and create jobs? Ito na yung 20 pesos sa rice. Kaya ba yun? Without raising taxes.
Well, again, I'll have to dampen your expectation a little bit by, in effect, almost predicting that raising taxes is inevitable. Hindi kaya. I mean, like was shown earlier, kung mga 300 billion pesos ang kailangang additional resources, and we can only raise up to 90 or so with improved tax collection, the rest will have to be made up with increased taxes. So the challenge is what kinds of taxes to raise so that it will not further hurt the economy and choke the economy further. That's what we call the non-distortive taxes. Naturally, wealth taxes is one. No? Of course, we also would like that because yung mas tatamaan yung mas kaya magbayad ng tax. Anyway, in short, that part of the question has to be addressed that way. But what should the government do? Again, our inflation is coming from food right now. And again, for various reasons, African swine fever, more costly fertilizer, but we really need to do what we can to be less dependent on those costly imported agricultural inputs, but at the same time, increase production. And that's why talagang kailangan nakatutok ngayon. And I think, sincerely, the president said he took charge of the Department of Agriculture because he really wants to make sure maayos yan, malinis muna yung mga dapat linisin sa Department of Agriculture at ma-restructure as necessary, because that is where we have to focus right now. We have to improve the accessibility and the availability of food, especially to our people, so that the price inflation, which is prominently coming from food, can be dampened.
Tanong ko na rin, sir, yung subsidy ba, do you think, in what form can that be done? Is that, hindi naman siguro dole out, like kung 20 pesos yung para lang subsidize mo yung mga farmers, is that gonna work?
No, it's not. In fact, it's not a good idea precisely because kung ganun rin lang, edi bigay mo na ng pera, diretso sa tao. But frankly, I cited in an article before that if you're looking at 20 peso rice, there's a rule of thumb in rice. The price of rice per kilo at the retail is 2 times the price of the palay at the farm gate. That's always been the case because between palay and rice, when you mill the palay, about 40% of the volume is already gone because it's really the husk of the palay. So the milling recovery itself is just about 60%. And then the cost of the transport and logistics. Kaya ang pagdating sa retail, doble yung presyo. No? So what does that mean? Pag 20 pesos per kilo yung rice mo sa retail, 10 pesos lang dapat ang pupunta sa farmers. Kawawa naman ng farmers natin who are spending anywhere from 12 to 15 according to latest estimates per kilo of palay that they produce. They will not make money and they will stop producing rice if that's the case, if they can only get 10 pesos. So the only way to get 20 peso rice, bayaran ng gobyerno directly yung difference of 2 to 5 pesos to the farmers. We can't afford that kind of direct subsidy. So we might as well be more realistic. And of course, one of the ways to make sure that the price is also kept at reasonable levels is to open our trade. Many people don't like us importing, but that is what forces us to be on our feet, to be able to compete and to be able to produce rice just as efficiently as our neighbors are able to. So we have to keep the trade lines open as well so that the accessibility at lower prices remains there. At the same time, forcing our government to help our farmers match the kind of costs that are being incurred by the Vietnamese and Thai farmers around us.
Yeah. But sir, you mentioned kanina, there are talks about, totoo ba yung danger na yun that Vietnam may stop exporting?
Well, they are now as I said, Vietnam and Thailand have been talking about restricting, if not outright stopping, their exports of rice. If if things really get worse in terms of world food supply, they want to make sure that they have enough for their own people. So again, that will be a problem. And that's the reason why immediately we have to work on raising our own rice production and doing it as productively as we can, as efficiently as we can. Kasi nga, maaaring may pambili nga tayo ng rice, pero kung wala namang mabili o masyadong mahal na, then again, we continue to have a problem. So indeed, that is the reason why, again, people describe this coming food crisis as a really serious storm. And even the FAO says so. So kailangan talagang, I guess part of it is, mas maganda siguro i-hype mo para lalong mas maging urgent ang reaction ng mga iba-ibang bansa to be able to really prepare for it.
Okay. So medyo maraming trabaho sila economic managers natin.
Marami talaga. It's going to be very challenging. Yeah.
Let's just get one more question. Tapos we'll have a panel with the fund managers to see how it affects fixed income, and then we'll have you again, sir.
Sure.
Ito, last question na lang muna at this point from Monzen. So if the lower export share has shielded us from external shocks, why do we want to reach the export share levels of other countries? Won't that increase vulnerabilities?
Well, the answer is simple. We simply need more jobs. And that's the reason why our neighboring countries have been much more economically dynamic than we have. But yes, it leads also to much more to go down when the global environment is actually in trouble. Pero at this point, we really, as you know, we have to have 10 million almost of our people working overseas, simply because there are not enough jobs, productive jobs at least, and well-paying jobs here at home. So we need more, and the only way for our economy to grow is to look to the export markets. Because again, as I said, we have a very limited domestic market. If you're only looking at selling domestically, you will reach your ceiling of growth very quickly. So we really still have to look at exports, no matter that it will raise our vulnerability later on. Let's think more about the jobs needed now, rather than worrying about the vulnerabilities abroad. No? Holding everything constant, we're better off exporting more and finding more companies, domestic and foreign, to provide the jobs that will allow us to do so.
More jobs. Kailangan talaga natin more jobs.